All right. Community bonds. I'm sure there are many different reasons and different organizations who are interested in community financing. And today I'm going to go through three different things. I'm going to give a definition of community bonds and share a couple of inspiring examples of leaders of organizations who've raised community bonds themselves. Secondly, I'm going to give a way for you to evaluate whether or not community bonds might be a tool that can help your organization right now or down the road in financing a project. And lastly, if community bonds might be something that can help you, I'm going to give some practical tools, frameworks, and opportunities to get started on your community bond journey. Here we go. Who am I? Who are we? We are TREC. TREC is the Toronto Renewable Energy Co-op. We've been around for the past 20 years with all types of experience centered around raising community finance to bring important projects to life. Since about 1998, we've supported 7 different organizations across 13 different community bond campaigns in raising and managing $55 million in community investment. And in addition to supporting the raise of this community dollars, we also manage over 3,500 community investors on our platform, but more on that and on the community bond process in a little bit. Some housekeeping. This webinar is going to be 20 minutes of me speaking, followed by a 10-minute Q&A. If you have a question, feel free, click on the green box on the top of your screen. And if you'd like to submit a comment to the entire group, you can write your message in the chat box to the left of your screen. If you'd like to get a copy of this presentation afterwards, of course, send me an email. That's ryan@trc.on.ca. I'm also here to introduce Tapestry Community Capital. Tapestry, this is a bit of a sneak peek, is the new venture of TREC that's launching specific to community bonds on April 1st. We are inspired by the communities, the projects, and the issues that were all woven together in this amazing process that brings the community bond to life. What are community bonds? They're a social finance tool that's been used by many different co-op and nonprofit organizations. The interesting thing about a community bond is that it's issued in the name of your organization. So it's different than, let's say, a green bond or a generic green energy bond that an investor invests in, and the investment goes into a portfolio of different projects. The bond is issued in the name of your organization to finance an important project, and it's raised by your community. The community bond is debt. It's an interest-bearing loan from your community that you have to pay back. And when it's done properly, it can be held in RSP and TFSA accounts, making it a very attractive investment to people looking to put their money into important projects. I like to say if we take all of the security and the known things of conventional bond and we add a social return, that gives us a community bond. Speaking to some of the history of community bonds, we've seen them happen across many different sectors, and we've seen the amounts raised range from, under $500,000 to over $5 million. Arts and culture, community hubs, co-working, sustainable food, sustainable energy, and affordable housing. Looking at all of these sectors, there have been successful community bond raises coming from all of these different types of organizations. However, in the past, there wasn't necessarily a cookbook, a set of templates, a guidebook to bring these projects to life in an organized way that's effective, efficient on your time, money. After doing our research and looking back and reflecting on our experience supporting many of these organizations in the community bond process, we've learned two things. First, your bold ideas need a champion to come to life. What is a champion? Who is a champion? A champion is the person, the individual who is going to work, fight, voice, and move your project and your bond raise forward. In all of the successful projects that we've seen, it takes a champion, a person, to bring them to life. Second, it's not just about one person. The project has to be significant to the greater community. The community bond doesn't work when it goes to fund something that happens behind the scenes or that goes to fund operating costs. It goes to finance and to bring to life an important project that's important and iconic to a community. At the same time, we're seeing organizations look for creative ways to bring their ideas and their projects to life. On the investor side, overall, Canadians are increasingly investing in things that are impactful, that are local, and that are ethical. The term for this industry and for this market is called impact investing. Just last year, this market was valued at just under $10 billion. However, in the next 5 years, it's forecasted to triple to $30 billion. Something that we hear quite often at Trek and at Tapestry is that there are many investors who are looking for places to put their money that make an impact socially, environmentally, that affect their community in a positive way. A couple of stories. I want you to meet Tanya. Tanya Sermon, perhaps you might know her, is one of the founders and the executive director of the Center for Social Innovation. Center for Social Innovation. The CSI, as it's known, was established in 2003 as a co-working space for nonprofits, social enterprises, and individuals who are looking to make a change in the world. At the time, this concept of co-working was relatively new. It was maybe happening in other places, but wasn't necessarily coined in Toronto, where they leased out office space to nonprofits and all these individuals. It became so popular that just within a few years, they had a waiting list. Many people who are knocking on the door, begging, pleading, Tanya, let us in. We want to work and be a part of this amazing community. Well, by 2009, this issue was just ballooning. There's a big waiting list, and at the time, even rents in Toronto were going up. Tanya had a bold idea. We need to own our own building. What if we bought a building? On first reaction, this was a crazy idea. They had less than $50,000 in the bank. They were a nonprofit with no assets. She consulted their board. She looked at all the different people who were signed up, committing that if they had a bigger building, they would lease and pay for a space on a monthly basis. They took this information to their local credit union, to their local bank. They were willing to give them a mortgage of 80% that would go towards a $5 million building. Well, taking into account that extra 20% and also the cost of renovation, they needed something to bridge that gap to make this project happen. Enter the CSI Community Bond. CSI ended up raising $2 million in community bonds that went towards this $5 million building. All their bonds were RSP, TFSA eligible. They were so successful that they went out and did it again. They bought a second building a few years later across the street from their lease facility. And that time, the community bonds made up nearly half of the cost of this $9 million building. What's important to take away from this story is that community bonds were not the full piece of the financing pie in the case of the CSI. And also, that they leveraged their existing demand, community, and expressions of interest from tenants to go take a very calculated but risky leap of faith. This is Mike Brigham, the founder of SolarShare, which is a venture originally started by Trek. But Mike, in the late 2000s, was looking around at the solar industry. He was very passionate about renewable energy and about solar energy. But when he looked around, all of these projects being created were coming from large developers, big corporate interests, big money. Mike wanted to know, his dream was, is there a way that we could make development and the ownership of these important solar projects come from community members, average citizens with an interest in sustainable energy? Mike started SolarShare. They issued $1,000 bonds with 5% interest, making it an accessible investment to all different types of people looking to put their money towards a good place. So far, they've raised $35 million in these solar bonds, which has gone towards financing 45 solar projects across Ontario. This $35 million in solar bonds comes from over 1,500 investors. And the thing to note is that most have invested multiple times. And 75% of these investors, when their bond comes up for redemption, reinvest their money in new SolarShare projects. So with the community bond, it's not just about raising money for one project, dusting your hands off, and saying goodbye to your investor. It's about starting a relationship with an investor who cares about your organization and who is willing and interested in investing in new projects down the road if the relationship and the experience is handled well. SolarShare also doesn't use community bonds for the only source of their financing. Their $35 million in solar bonds is matched with $70 million in long-term debt. So they're able to take every $3 in a solar bond and match that with $7 in debt. And that allows them to have a really big impact and a lot of assets around Ontario. I've spoken about Mike, I've spoken about Tanya. How do we know if a community bond is right for your project or organization? I'm going to go through 5 different criteria that can give you a bit of a checklist, a bit of a temperature gauge on if they're right for your organization, either now or down the future. First and foremost, community bond goes towards a project that has social and/or environmental impact. So does your project have impact? Are you looking to raise an adequate amount in community bonds? Right now, you say a threshold is about $500,000 in a community bond raise is a good entry point. Anything less than that, there are other sources of financing that might make this tool a better choice for your project. Is your project financially viable? Do you have a revenue model? Are you confident in your ability to handle risk and pay your investors back? Does it have a widespread potential for community engagement? Is this an iconic community project? It goes back to that second lesson. Is this something that people are going to rally behind and want to bring to life? Is it going to be an attractive investment for your supporters? Are you able to offer an interest rate? Are you able to think like an investor and phrase and scope and frame your project like an investment? And one of the most important things to think about before getting started is, does your project and does this mode of financing have support from your organization and from your board? So before going out and engaging the greater community, it's important to have buy-in right within your organization. The big transition that community bonds speak to for organizations is this move from supporters to investors. Supporters to investors. Take a moment and think about your supporters for your organization, for your company. It might be board members, your customers, your service partners, advocates in the media, your donors. You can even think beyond that. When I think about my supporters, I think about my mother. I think about my partner. I think about my mentors. How do we turn these supporters, people who support your work, who support your community, and who share your values, into becoming investors? It does require a shift in mindset, but one that is very much possible. At Tapestry, we support the full cycle of services for a community bond campaign. The structure, the raise, and the management. This is going back to the earlier point about not having a recipe book, not having a cookbook to make community bonds scalable, to make them easily understood and cost-effective. Every community bond raise has these three elements: structure, raise, and manage. Structure, raise, and manage. The structure phase is the early planning, homework, and assessment and groundwork that ensures that your raise, actually raising your capital, is done effectively and efficiently. The management is what happens at the end after the bond is raised, corresponding with your investors, treating them like investors, distributing their interest payments, their T5s, and ensuring there's a positive investor experience that they'll be likely to reinvest and engage with your organization. There's more on that in a workshop that we run that, as I highlight about this challenge at Tapestry, we offer a free accelerator workshop to help you launch your community bond campaign. For any organizations who are interested, we do support within a half-day framework your board, your staff, to assess whether a community bond works and give you a really good taste of what that looks like. Going back to the structure, raise, manage, it's an important framework that we can get into more in future workshops, as well as reading on Tapestry and our community bond process. At a high level, we need to structure our offering, which means finding out who our investors are, because we can target many different groups who can invest many different amounts, creating our offering statements, engaging with brokers and institutions, potentially to support the RSP and TFSA eligibility. The raise is about the exciting time of going out, raising your money within the desired period of time. And as I mentioned, the managed is about providing quality and professional experience with your investors. As you see the thread that weaves together, maybe you recognize your face or your project in this tapestry, and we would love for you to be part of our tapestry. As I mentioned, please get in touch, ryan@track.on.ca if you'd like a copy, and at this time, I'll be taking your questions. Thank you.